So hi guys, this is Chetan Pudar back again, and today I'm going to talk to you about the topic is that why study the price, why study charts, what is that the price and charts tell us that other things with parameters in the market don't tell us. There is a lot of news which comes out in the market. So rather than focusing on news, why do you read the charts? There is a lot of fundamental analysis which gets done in the stock market. So why study charts? Why not study fundamental analysis? Primary three ways in which you can get information out of the market. The number one way of getting information is by studying the charts, which is the price. Second is studying indicators, which is again a derivation of price. Third is about studying news. So as the news comes into the market, the prices go up and down, so you study the news. And fourth and the final one is study the fundamental analysis. Now this is the topic which I'm going to talk about. So I'm going to go by elimination. So first of all, I'm going to talk about the news. Now whenever there is a news which comes out in the market, what really happens is that the stocks start going up or down. Now whenever there is a news in the market, there are two parts of it. One is that the news which you get, and the typical news which you get in the market always comes after a certain period of time. There is always a lapse. There are a lot of professionals who are sitting in the market and they are discounting news very quickly, which means there is a very high chances that the news has come to them much earlier, and because they are professionals and they have discounted the news, which means by the time the news comes to you and you start reacting on it, you are fairly late. Also, second part of it is that there is always hidden news in the market. The hidden news in the market is the news which is dissipated by people who are the insiders, which means, suppose for example you have a friend who works with a certain company. Let's say he works with Reliance and he's at the top management of Reliance. Obviously he's going to get the news which is an internal news. Now that news is going to come out in the market after about 1 or 2 months, and if it is going to come after 1 or 2 months, what is he going to, if the news is favorable, what is he going to do? He's going to start buying. And the moment he starts buying, what happens to the price? The moment he starts buying, it's creating demand, and when the moment demand is created, what happens to the price? Price starts going up, which means the news has come to you late. By the time the price is already moved, which means whenever there is a news which is coming out into play, there are people who are professionals who get this news much earlier, and by the time the news comes to you and you are ready to discount the news by acting on it, the price has already moved. That is the reason why we always say that you should never listen to news, because news translate into actions of people, which translate into price moving up or down, which translate into you buying or selling. So no point going through the news. Price is telling you a lot more accurate information. Second part of it is, whenever there is news which is coming out in the market, you really don't know which way the price is going to swing. Reason by, let's say for example, at this point of time today, there was a news that the particular company is doing very well, and that the news has come in right now. But there has already been news in the market some 2 months back, which is internal news, which means the people who are in the know have already bought the stock. So when they have already bought the stock and the price has started going up, today the news comes out. So when the news comes out, what are they going to do? They are going to sell. Who are the people who are going to buy? You. So you are basically the 95% of the retail people. Those are the professionals. So hence you should not be trading on news. Second part of it is let's look at fundamental analysis. Now what is fundamental analysis? Fundamental analysis is basically used to buy companies and buy the business, underlying business of companies. Which means, for example, let's say if I want to invest into Reliance, which means I am really investing into the business of Reliance, which is oil and gas sector. And for you to understand what an oil and gas sector is, you have to study oil and gas sector, and it's a very complex thing. Most of the people who do fundamental analysis are full-time professional people. There are about 34 different ratios as prescribed by the CFA Institute for doing fundamental analysis. So you have to take 34 different variables and combine them and do permutation and combination of all those 34 variables in such a manner that you finally get an answer whether the stock is at a certain price, valued rightly at a certain price or not, or the stock is overpriced or underpriced. Now the funny part about fundamental analysis is, let's consider that every person who is doing a fundamental analysis is a professional. Now the funny part about fundamental analysis is that if I give the same balance sheet to 10 best full-time fundamental analyst professionals, the right price of the stock according to all 10 of them is going to differ. Why? Because it depends from the point of view of the way they go about doing fundamental analysis. So which basically means that the fundamental analysis done by every person in the market is going to be different. The pricing is going to be different, and because the pricing is going to be different, so basically according to me, fundamental analysis is basically deriving a price. And that is an opinion of somebody who's coming up with fundamental analysis. And hence I always say this, that fundamental analyst or fundamental analysis says that whatever analysis I am doing is right. The price with which I come out evaluating the stock is right. The market is wrong. So suppose if I do fundamental analysis on Reliance Industries and say that the price of Reliance Industries is the accurate price of Reliance Industries is about 700, and if the market is trading that stock at 850, so what I'm basically saying as fundamental analysis is that my analysis says that the right price for that stock is 700, market is trading it at 850, which means market is wrong, I am right. That is the fundamental flaw of fundamental analysis. And I always say that the market is always right, you are always wrong. Why? Because market or the price traded is the consensus of millions and millions people into the stock market. So when I'm essentially saying that I am right and they are wrong, I'm basically going against the grain of thinking that the larger population has got less information than you have. Which means you are essentially saying that million people are wrong in the market and you are right. Which also discounts the fact that maybe million people are more smarter than you, maybe million people have got more information than you, and they are all wrong. So hence fundamental analysis doesn't work for short-term basis. But if you want to buy a stock of a company, or if you want to buy a company for a longer term perspective, fundamental analysis is excellent, which means 10 years or 12 years. Again, the time horizon of holding should be 10 or 12 years, and your accuracy level of fundamental analysis has to be right. So fundamental analysis is not what really helps you into the market for understanding. News does not help you. So which means what is really remaining finally is the price. And so there is a school of thought saying that indicators help you to make money and indicators don't help you to make money. And the reason why is because indicators is a derivation of price and volume. Indicator is basically a formula which modifies and modulates the price and the volume in such a manner that it gives you a representation on the chart. So moving averages is a derivation of price, stochastics is a derivation of price, MACD is a derivation of price, the RSI is a derivation of price. So all I'm saying is that if everything is a derivation of price, why not look at price as a primary indicator? And that is the reason why you should be studying price. Now let me just explain to you in slightly in a different manner. Whenever we are studying the price, what it basically means is that, like for example, there is a price tells you two things. One, it tells you whether there is demand or supply existing in the market. It also tells you whether there is greed or fear or confusion. Yeah, so and we all know this rule very well. You buy the stock when there is demand coming into play, where demand exceeds supply and hence price goes up and hence you buy, or you buy when there is a lot of greed which is coming into play. So when do you not get into the market as far as buying is concerned? You don't get into the market where there is supply coming into play. You don't get into the market of buying when there is confusion or when there is fear into the market. Now what happens? Now let me explain to you in a different manner. Let's say for example I'm a fundamental analyst and I have done the fundamental analysis of a stock and the stock seems to be very good. So what am I going to do? I'm going to put buy orders and I'm going to buy huge quantities of the stock. And whenever I'm buying huge quantities of the stock, what really happens? I'm creating demand, price goes up. Does it get reflected into the chart? Of course it does. When it gets reflected into the chart saying that there is a huge demand created, what are people like you and me who are trained to do this are going to do? We are going to buy it, which means somebody doing fundamental analysis in the market and buying the stock helps us to figure out that there is a demand, and that demand is what we basically work on, and it helps us to make money. Similarly, if there is a good news in the market, and if the good news is really good news, authentic news, what is going to happen? And it has just been released right now. The moment there's a good news, people are going to buy. When the people are going to buy, what happens? Demand is created, price goes up, we end up buying. Also, suppose there is what is called as a hidden news. Now, whenever there is a hidden news, now it has not come out in the market. The moment there is a very good hidden news, what are people in the know going to do? They are going to start buying the stock. The moment they start buying the stock, they create demand. The moment they create demand, price goes up. Which means in all these scenarios, what we are looking at is people perceiving what is right and wrong in the market, create demand or create greed. We as people who are learning how to read the price are capitulating on the information that there is greed and demand into the market and we are buying. And hence finally the action is that the price starts going up. So we are going to focus on more of the action part, because action does not lie. Words lie, but actions don't lie. And action is people are ready to pay a price to buy it, and hence price goes up. And hence the reason why we should be reading the price. So this is the reason why we all focus on the chart, because charts are basically price, which are traded price, and the moment price is traded, it is the most authentic information about that stock at that point of time, and it tells us whether there is greed or fear, demand or supply. Thanks guys, this is Chetan Pudar back again.